It's open.
Good afternoon. This is Deborah Jeffrey. I'm the Inspector General of the Corporation for National and Community Service, and I want to welcome everybody back on the line. I came to CNCS because I was very impressed with the commitment of its people to making a difference, particularly at a time when public resources are dwindling. And in my brief time on the job, my respect has only grown. As money gets tighter, it becomes that much more important to make sure that none of it is wasted or taken by fraud. And that's where the Inspector General comes in. The IG's mandate is to make sure that federal funds are used efficiently, without waste or fraud, and in compliance with the laws established by Congress. I hope that fraud prevention will figure prominently in your senior core planning. We're particularly fortunate that Ron Huritz is here to speak with us about that important topic. Ron is an auditor of many years' experience. After 20 years in the banking industry, he was the perfect guy to assist the government during the savings and loan crisis of the 1990s. He evidently developed a taste for public service because he went on to join the Department of Housing and Urban Development, where he oversaw audits of public housing authorities and community block grant recipients in a 6-state region. That made him a natural for CNCS, where he served with distinction for the past 8 years, conducting financial statement, grant, and fraud audits. Ron holds every auditing credential known to man, and he is one of only a handful of certified Inspector General auditors in the United States. But the most important thing to know about Ron is that he punctures the stereotype that auditors are boring. He's witty, down-to-earth, and entertaining, even on the serious topic of preventing and detecting fraud. His perspective will help all of us be better stewards of the resources under our supervision. Ron?
Thank you, Ms. Jeffrey. Good afternoon, everyone. I appreciate those kind words. We're going to spend a few at the end of the session. We'll take some questions. Let me first mention to you that on your screen on the left side there is an indicator button for closed captioning. For those of you who may need to avail yourselves of that service, you can click on that closed captioning indicator right now. Also, the slides are going to be available, of course, to you in the Resource Center at the conclusion of this broadcast and at the conclusion of this virtual conference. So let's begin with a purpose statement that describes the reason for our being and what we're going to accomplish here in the next few minutes. We're going to describe the IG's office to allow you to understand our mission. We're going to identify some fraud indicators in corporation programs, and we're going to advise you how and when to contact the IG when you have an issue or a suspicion about a grantee or some indication of fraud that needs to be reported. At present, there are something like 76 separate offices of Inspector General in the federal government. Every major federal agency has its own IG, and every one of those IG offices has a mission statement. And you're now looking at what our present mission statement is. It is to conduct audits and investigations on corporation programs and operations, to recommend policies designed to prevent and detect fraud, waste, and abuse, and to promote economy, efficiency, and effectiveness of corporation programs and operations. In addition to that fraud, waste, and abuse, sometimes some people will add a fourth mission statement, and that includes investigating mismanagement of government resources, which, as we all know, are shrinking practically day by day. The third element of the mission statement is to keep the corporation's chief executive officer and Congress fully informed about problems and deficiencies that we identify as well as the need for corrective actions. One of the main bases of IG offices is maintaining our independence. The structure of the IG's office in relationship to the agency is such that we are totally independent of the Corporation for National and Community Service. We do report directly to the United States Congress and administratively to Chief Executive Officer Wendy Spencer. The IG's authority to conduct these audits and investigations that we'll talk more about momentarily comes from a piece of legislation that goes back quite a few years now, the Inspector General Act of 1978, and it's been amended several times since then. And one of the primary indicators of our independence is that our funding is provided by a separate congressional appropriation each year. We are not dependent on the same appropriation or derive our funds from the same appropriation that the agency gets. We get a separate one each year. Also, all OIG employees must be free of any personal or organizational conflicts of interest with grantees that we audit or investigate. We must remain objective at all times in conducting our work. And in fact, at the beginning of every fiscal year, all of the members of the audit staff in particular at the IG's office are required to sign a statement that attests to our not having any conflicts of interest to our knowledge. And if we ever become aware of any conflicts, we are required to report that up the chain immediately. So what do we do exactly? The IG's primary goal and primary objective is to promote economy, efficiency, and effectiveness in agency programs, as we mentioned. And we do that using basically two operational sides of the house, the audit and investigation side. Those are the working segments of the IG's office. And we also have a small support unit that provides administrative assistance and budget tracking and so on. And in addition, we have a counsel to the Inspector General who is a long-standing corporation employee, an attorney of some renown, and that gentleman provides very able assistance and advice to the IG on many topics that come to our attention throughout the course of our work. What does the IG's office not do? Well, it's a very simple statement. We don't manage or direct any agency programs or operations. To do so would represent a conflict of interest. There's an old adage in the audit world that the auditors can't audit their own work. So if we were to, in fact, manage or direct any agency programs or operations, we would have to recuse ourselves from auditing anything that we have any input on. Now, we do act in some capacities as advisors or engage in consultation from time to time with agency management, but in no way can that be construed as managing or directing any agency programs or operations. We're all about fraud detection and prevention, and there are a lot of different definitions of fraud, but this is one that we like in particular because it's kind of short, sweet, and to the point. And that is that we regard fraud as any intentional misrepresentation of facts made by an individual to deprive another of something of value. Kind of an academic-sounding definition, but all it really says is that someone who is misrepresenting in any shape or form with the intent to elicit something of value from another person in a fraudulent manner, that, of course, is a very easy way to define what fraud truly is. And there are a number of other definitions in law dictionaries and regular dictionaries and textbooks, but this one seems to suit us very well. How does fraud impact corporation programs? Well, these are just a few possible results. This is just a list of 5 elements that we've pared down from a much longer list. And right at the very top of this list, you'll see that negative publicity can result for the organization if it is publicized that and made known that fraud has permeated a program either on the AmeriCorps side, on the senior corps side, or through whatever means. And one of our primary objectives, of course, is to avoid any negative publicity that casts a shadow over the corporation, any of its employees, any of its mission, any of its grantees, and we do our best to avoid any semblance of any negative publicity. A second impact is that fraud tends to undermine community confidence in our programs. And just to the right of these bullets, you see a headline that was taken from an actual newspaper article of some years back. A charity group leader was exposed as a fraud, and of course there's a very long article that goes along with that. But that's the type of headline that is rather disconcerting to see in a newspaper, the Washington Post, or any newspaper throughout the country. And our attempts to undermine community, to prevent an undermining of community confidence in our programs is always paramount in our minds. Another possible impact is that a decline in donations may result. Some of you may be aware that the corporation accepts gifts from corporate organizations and others, and the corporation could experience a marked decline in donations were there to be some negative publicity of some nature that fraud is impacting one of our programs. Also, it could certainly result in increased oversight by Congress, by other committees of the House or Senate. Of course, oversight can be a good thing in some respects because it's a check and balance, but increased oversight to the extent that people have suspicions about what's going on in the agency and such, that is not a good thing, and we try to avoid that at all costs. And of course, one of the more relevant impacts, potential impacts that impact all of you as grantees, either present or future, is that termination of grants can result when fraud is detected and investigated and proven in your programs. Grant termination is something that also leads to negative publicity. We've had some instances of that in the past. The press has seized upon that and made a big deal out of it, and in fact it is a very big deal because any grant that is terminated is certainly going to negatively impact your mission as a grantee and is going to impact negatively the people who are being served by your program as well. So let's talk a little now about misuse of grant funds. This gets into more of the nitty-gritty. And there are various elements of misuse and various different types, some more dangerous than others, some more serious than others. But this is a rather concise and easy to understand list. Non-grant related expenditures during a time when a corporation grant is the only funding source. And that can be an element of or an indicator of misuse because if the auditors, for example, become aware that there are non-grant related expenditures being claimed against a corporation grant, and the auditors are also aware that the corporation grant is, in fact, the only source of funding for that program, then the immediate suspicion or conclusion is that that one corporation grant is the only source that's providing the funds for these unrelated expenditures. There's no other source for the funds. And therefore, they look even closer at that to determine the nature of those non-grant related expenditures. Another element of misuse or example is the receipts for what appears to be non-grant expenditures are being charged to the grant. Now, believe it or not, there are some people who are so diligent about record keeping that they do maintain receipts for lots of things, including things that they probably should not retain receipts for, and that includes provides evidence for the auditors that non-grant related expenditures are being claimed against our grant. And that's kind of a rather touchy situation, as you can imagine. You would think that receipts like that would be destroyed or not retained, but in cases where it's plain, this is one of those things like hidden in plain sight, that there are receipts for non-grant expenditures, the auditors have the evidence laid practically right in their lap. Another instance of misuse or example are that funds are drawn down on unoccupied volunteer slots. Now, you all know, or if you are a future grantee, you will come to know that there are a number of slots that are allocated to every grantee. And there are a given number of dollars that correspond to each of those volunteer slots. So, for example, if a grantee is allocated 80 slots for volunteers, but only 60 of those slots are actually filled with volunteers. However, all of the funds are drawn down by the grantee. The question arises, well, what are those extra funds being used for? Because there aren't the full complement of volunteers in place. So that is a red flag that the auditors are required to investigate further. And of course, any unauthorized personnel expenses that are charged against the grant will be reviewed in detail as well. Remaining items on this list of misuse, the drawdown of all or most of grant funds well before the end of the grant year. Now, sometimes there are good, valid reasons for that, and of course, the auditors will investigate the reason for that, question management, and review documentation to determine why that is the case. But I would say that in most cases that we have seen in my experience, funds that are drawn down prematurely before the end of the grant year are an indicator of some type of activity that warrants further investigation by us. Documents that are not signed or dated are always a problem because you can't establish the flow of certain activities, and just as the Internal Revenue Service, for example, would not accept a tax return that's not signed, the auditors will not accept even original documents or any type of document that does not have an appropriate authorized signature and a date on the document that makes sense. In other words, we look for backdating of documents and things of that nature as well. Now, the last one is one of my favorites in this list, preparing documents the night before an inspection, site visit, or audit. And you'd be surprised how many people burn the midnight oil when they know that the auditors are coming, and they prepare documents, and believe me, it's very easy to determine that something was just recently prepared in anticipation of the auditor's visit. Either because of the way something is signed or not signed, or people make mistakes and put current dates on things when what they really intended to do, if they were really trying to throw us off the track, would be predate something with a back date, but sometimes that doesn't happen. So preparing documents the night before an audit begins is a big no-no. And we do find that in many cases, and that's when the investigators in particular are brought in. Now, let me explain also, and I'm sure you're aware of this, that Auditors live or die with timesheets. One of the things that is most important, probably right at the very top of the list, is that timesheets determine how and when members, AmeriCorps members and senior corps volunteers are entitled to the remuneration that attaches to the grant programs, either a stipend or living allowance, or in the case of, on the AmeriCorps side, an education award. So we frequently, in practically every audit situation, look at timesheets in much detail. Now, documents that appear to have all been prepared at the same time is an indicator that somebody is trying to cover something up or throw us off the track, because timesheets, of course, are supposed to be contemporaneous records that are signed and submitted to a payroll function, for example, on a periodic basis, generally to coincide with payroll periods. So we have had many cases in our office here of timesheets that were all signed by the same person at the same time with the same pen, and it's very easy to detect those. And of course, that's an indication that something is askew, either because of some intentional fraud or just because someone, like a supervisor at the program level, did not take the time to find these volunteers to get their signature, or is not very diligent about record keeping. Hours claimed must be reasonable and allowable. A quick example there, we've had cases in the past where timesheets said something like 20 hours a day is what a volunteer or a member recorded on the timesheet. And you ask yourself, well, how is that possible? Well, there are some people who misinterpret what the rules are with respect to how many hours they are allowed to be in service. And there are some cases where volunteers are at a location other than their home site location, and the interpretation has been, well, if we're away from our home site, then we are allowed to claim all of the hours that we are actually, quote, on duty, unquote. Well, that has been debunked a long time ago, and generally speaking, the auditors will use a benchmark of about 10 hours a day, 10 to 12 perhaps, as being reasonable and allowable. So something that you need to be, always need to be aware of is that reasonableness and allowability are one of the very first things that the auditors will look at when it comes to timesheets. Also, this one may be a little curious to some of you. Volunteers that hand carry their timesheet from their subsites to the program office. Well, we ask ourselves, are those people who are they who are carrying those manually, are they authorized? Are those timesheets authorized by a supervisory person who is in a position to know the hours that person actually recorded on the timesheet? So if we see a situation of that nature, that the volunteers are bringing their timesheets to a program office or actually to a payroll processing office, we question that immediately, because the presumption is that there was no supervisory review or approval of that timesheet. Any timesheet hours that do not match payroll records, well, that's kind of a no-brainer. That's like any type of payroll record. If hours are inflated, if they don't match payroll records for any number of reasons, that throws up a red flag as well. In addition, staff percentage of time charged to 2 or more programs is greater than 100%. Well, the last time I looked, there are only so many hours in a day, and you cannot exceed that number of hours in a day. So anyone who is trying to possibly commit timesheet fraud, who is adding up hours, recording hours that exceed 100% of the allowable hours for a given day or week or month, are asking for trouble. because the auditors are certain to look at that. There are various other kinds of fraud that we see, unfortunately, too frequently. One is embezzlement, and then we'll talk about theft, and there is a very distinct difference between the two. In terms of embezzlement, we see such things as no secondary endorsements on checks when they're required. In other words, two signers on the front of the check, or even a double endorsement on the rear of the check in some cases. Members and staff are not being paid appropriately. That usually, we're made aware of that through a hotline tip, which we'll talk more about in a moment. But if somebody's not getting paid as they're supposed to be, where are those funds going to? Hopefully not into somebody's pocket. Double payments or payments to ghost individuals. Any auditor knows that just a rather basic payroll audit of any type, whether it's in government or in private industry, sometimes payroll registers have this knack of developing ghost employees. And, of course, needless to say, that is a fraudulent situation. So double payments or payments to ghost individuals are always red flags that we investigate. Also, a frequent use of whiteout, pen and ink changes, or strikeouts. Again, this is relating primarily to timesheets. Missing documents or using copies instead of originals. Why are timesheets being submitted as copies rather than the original document? We'll take a very close look at that. And then also the rather simple situation of funds that are missing with no sign of break-in or burglary. Back for just a moment to the frequent use of whiteout. The rule that of thumb that we follow is that any timesheet, and that's any timesheet, that contains any indication of whiteout, liquid paper, whatever they call it these days, in its current iteration, is subject to leading to question costs for the hours that are being claimed on that timesheet, because it's impossible to determine who made those changes, who actually painted out those numbers, changed the numbers, were they inflated numbers, and so which is also why we insist on original documents, because whiteout shows up much more frequently and a lot easier on original documents. If we see timesheets that have any type of expunged numbers or deleted numbers or whited out numbers, that could bring the investigators down on top of you very quickly and easily. Let's move on to theft. Now, I said there's a distinction. Theft is just what you think it is. Purchasing items that are not used by the organization. We've had a very recent case of a grantee who went out and bought a few computers with corporation funds, with grant funds, but the auditors asked to see those computers. They were not at the grantee's site. They turned out to be in somebody's house. So that is not the purpose for which those computers were intended, I can assure you. Also, receipts for items that cannot be traced to a valid purchase receipt. That one's rather a no-brainer, I think. Property that's not properly controlled or inventoried. On occasion, we don't do a lot of inventories, but we do on occasion when it is known that the grantee has purchased a lot of items that are intended for use in some way by the grant or by the volunteers. And if that property is not properly controlled or inventoried, there may be an element of theft. Also, charge card purchases that aren't properly monitored, excessive mileage that may be claimed for travel to project sites, or something rather simple like mailing or telephone or supply costs that increase suddenly and without adequate explanation. There are some grantees, we discourage this, but there are some grantees who maintain petty cash funds, and those petty cash funds may be a portion of grant funds, If those funds are misused or disappear suddenly, as it says on the slide here, there may be an instance of theft that would require our investigators to take a closer look. Now let's talk about red flags. I've mentioned the word several times. Red flags are simply indicators of something wrong, indicators that the auditors need to look a little bit deeper, investigate a little further, ask a few more questions to determine what's really going on, if there's an element of fraud or a situation of fraud present. And these are some of the red flags. This is taken from a very long list of about 40 or 50 red flags that we look at on occasion, but these are some of the more common ones. Personal problems or pressures that a volunteer may have, or that a staff member, employee type person on your staff may have. Sometimes personal problems and peer pressure or just financial pressures of whatever nature lead people to do things that they wouldn't ordinarily do absent those pressures or problems. So that if that becomes known to you, that someone in your employ or a volunteer is experiencing some of these personal problems or pressures, that is an indicator that there may be something that needs a closer look. Dramatic lifestyle increases is a certain indicator. I have many a story about someone who has suddenly appeared at work sporting fancy jewelry or driving a car that everyone looks at and thinks to themselves, how can that person afford that? That person makes the same salary that I do. And absent another explanation like an inheritance or some sort, again, these are just red flag indicators that there may be some reason to look a little deeper into that. Also, close relationships with suppliers and vendors can raise a red flag with us on occasion because of collusion or something that is leading to perhaps a theft or embezzlement situation. Someone who does not take a vacation ever, I don't know who that would be, but there must be somebody out there like that, or claims never to take any sick leave is cause for suspicion because especially many agencies, federal agencies, perhaps not so much so, but in the private sector, there are requirements for employees to take vacations 2 weeks consecutively or 1 week, whatever the situation may be. And there's a reason for that, much more so than just sending someone off the Florida to bask in the sun for a week or two. And that is because presumably somebody else, while that person is on vacation, somebody else will do that employee's job and be able to determine if something is awry or if there's any type of cover-up situation happening or if funds are being misappropriated or so on. So anyone who does not take a vacation or sick leave ever is cause for suspicion, and I hate to use that word, but that's frankly what it is, and raises a red flag. Also, a reluctance to share information. Now, you'll encounter people, as many auditors have encountered, auditees, who are reluctant to give information, but there's a whole range of reasons for that. But in particular, those people who are in the financial area of agencies or grantee organizations who have control of funds, who have control of checkbooks, who have control of general ledgers, who are reluctant to share information and be responsive to auditors' questions, raise red flags for, I think, very obvious reasons. So what happens if you find any of these red flags within your organization? What is the best thing for you to do? I'll let you think about that for just a moment. But our answer from our posture here in the IG's office is to, and there are a number of things you can do, but our recommendation is that you pick up the phone and dial our hotline phone number. Now, every Inspector General office also has one of these hotline numbers. It's sometimes referred to as the Whistleblower Hotline, and you are encouraged to report whatever you have become aware of, suspected fraud, waste, or abuse. All information that you leave on that hotline number is confidential, and you may remain anonymous. Now, we say that because we're required to say that, but the fact is that anonymous tips sometimes don't get quite the same level of attention as identified tips. So if you call this hotline number, 800-452-8210, and you leave an anonymous tip, it's going to be awfully difficult for us to track down who you are, where you are, determine the authenticity of the tip that you're leaving, and do any investigation. Our investigators cannot be running all over the country trying to track down leads. Sometimes, on some occasions, we will refer matters of this nature to local law enforcement because we just don't have the resources to be tracking down so many leads, but anonymous tips are kind of problematic. So if you can, the more information you leave on a hotline, the more likely it is to be investigated. Once again, 800-452-8210. It's a toll-free number, and you will see the same number again and the hotline email address at the end of this presentation. Now let's talk about audits in particular for a couple minutes. So why, in fact, do we do audits? Well, we do them to be sure that the organization or the grantee, who of course is a recipient of federal funds, is doing what's required by the terms and conditions of your grant. And our approach is a long-term approach to find and correct weaknesses. This can help you as a grantee enhance your compliance with grant provisions and federal regulations. Hopefully your compliance will become stronger. That's the primary reason for audits. Audits are, some people view those as kind of painful experiences, but generally we refer to audits as management tools because they help to stamp out, hopefully that's our objective, fraud, waste, and abuse. So that's why we do audits in the first place. We have here a short list of OMB circulars. The Office of Management and Budget has federal cost principles that dictate what expenses, grant expenses, are allowable or unallowable. So here's a short list of the more common circulars that we use in determining whether expenditures that are reported and incurred by grantees conform to federal law. Circular A87, as you can see, we've got the short titles here. A110 are the uniform administrative requirements. A122 is for nonprofit organizations, and A133 is the Single Audit Act of 1984. Many of you are familiar with the Single Audit Act because, in fact, that's the audit that's done in your organization on an annual basis if you meet the criteria for the Single Audit Act. And some changes are coming. I'll mention those in a moment. There is a current attempt now to consolidate some of these OMB circulars. And in doing that, they're being consolidated into the Code of Federal Regulations, which is why it says after some of these. Now, instead of A87, it's being consolidated into Title II of the Code of Federal Regulations at Part 225, for example, for the first item there. These are some of the proposed changes, and this is very new. Some of these have been made already, but most of them have not. And this is something that we wanted to point out to you in particular because these will almost certainly impact you going forward as these various items are enacted. What the OMB would like to do is consolidate all or most of the grant circulars into a single kind of big daddy super circular, which is going to combine all the principles for all the grant types. Now, there's lots of pros and cons about this, whether it'll be easier or not easier to distinguish between what applies to each grantee. But again, this is a proposed change, and there has been an open comment period. I don't recall exactly what the status of that is at the moment, but there's been lots of input into this consolidation of grant circulars into a single circular. Also, another major proposed change has to do with indirect rates. And the proposal is to adopt or create a flat rate as opposed to the negotiated rates that some of you may be familiar with. You know the drill, I think, for those of you who have a NICRA, a negotiated rate agreement. You have to go through or jump all through the hoops and determine what your direct costs and your indirect costs are. And there's this range of rates that are acceptable, and you arrive at a negotiated rate. Well, presumably, that's a burdensome thing for grantees to do. So OMB has proposed that a flat rate be adopted, and whether, in fact, that will come to pass or not, we don't know. Like I say, many pros and cons there. Now, the Single Audit Act threshold is going to be changed, and this is more advantageous than it is not advantageous. What they're going to do is raise the $500,000 threshold, the present threshold, to $1 million for federal award expenditures. And different audit requirements will apply to each of these various levels. Between $1 million and $3 million, there will be 2 compliance requirements to be tested for major programs. I won't go into the specifics of this. Again, it's still in the proposal stage, but you'll hear lots more about this. If you are in the over $3 million category as a recipient of federal funds, then a full single audit will still be required. For obvious reasons, there's lots of dollar exposure there. And at the very bottom, perhaps a little hard to read, but it says the proposed rules will be published in the fall of this year after a second public comment period. There was an initial public comment period. Those comments were incorporated into a revised set of proposed changes, and now those proposed changes are in fact going to be submitted out to the public and in a second comment period, and you'll hear more about those as well. So we like to talk about sound practices and how those result in clean audits. Everybody's interested in a clean audit, and that should be the uppermost objective in your mind. So how can you not necessarily absolutely assure yourself of a clean audit, but these are certainly measures that you can take toward that goal. Have strong internal controls. One of the primary principles that govern the way we do our business in the Inspector General's office is that management is always responsible for creating and enforcing and managing its internal controls. The auditors do not do that. Auditors test controls, but management is responsible for establishing and maintaining those controls. The stronger, the better. What is one of the purposes of an audit? It's to determine whether your controls are strong enough to prevent problems or whether they're weak and need improving and strengthening. Document your systems. I can't tell you how many times we've gone into many different types of situations, audit situations, and there are either no documented policies and procedures, or the policies and procedures are in draft form since 1994. And that's not an uncommon situation, and we ask, how come these things are still in draft form? And the answer is, well, we just haven't gotten around to formalizing them yet, or whatever the reason is, and that's not a very good reason. So document your systems. Effective grant management, I think you all know what that means. It's pretty self-explanatory. Accurate record keeping, that's a must. You know, auditors live or die with documentation and timesheets. And adhering to all federal laws, regulations, and grant provisions. What's the best way for you to get ready for an audit? Have your systems, policies, and procedures in place before the grant is awarded to ensure that your organization operates within the rules of its federal assistance, and that means adhering to or abiding by the grant agreement in all cases. And of course, there it is again, compile and retain full documentation. That is a way that assures you that the auditors will not only come in the door smiling, but will leave your establishment smiling as well. Real quickly, I'm going to go through just a few minutes left here, then we're going to take some questions that have been posed. Some common audit findings. Organizations that don't keep separate accounting records for each grant. Your accounting system of whatever vintage it is, whatever flavor it is, must be able to separate and segregate one grant from another. The record keeping, the accounting for, the transactions for each grant. That is a must. Where that does not exist and grant record keeping or transaction record keeping or a general ledger does not segregate grants, that is a reportable item on our audit reports. Also, your federal financial reports do not reconcile to the accounting records. That's just like basically balancing a checkbook. One set of records, subsidiary records, must equal the controlling set of records, which is the general ledger in most cases. Staff timesheets don't comply with OMB circulars or the CFR requirements. We talked about that already. And then this is a very common finding of recent vintage that the National Sex Offender Public Registry and criminal history checks are not being performed or are not performed in a timely manner or aren't properly documented. And there are many training sessions that some of which you may have attended already. I'm sure you'll hear a lot more about this in other training sessions. This is a big thing now that the auditors are looking at very frequently. And volunteer eligibility not documented. One of the most basic tenets of eligibility to serve in capacity of a senior corps volunteer or an AmeriCorps member is that members must meet the eligibility requirements. And I don't have time to talk about those in particular, but again, these are common audit findings that lead to various comments and reports. Match dollars that are not properly documented in your general ledger. The same level of documentation is required for all types of whether it's federal costs, federal share costs, or match costs. You must maintain adequate documentation for that. Also, there's no explanation of how you arrived at the value for in-kind match. And you can't just pull a number out of the air. There's any number of ways that you can establish the valuation for recording your in-kind match. I don't have the time to discuss that in more detail here, but again, this is something that is a rather frequent, perhaps too frequent finding. And there's no record of match sources. Some people keep very good source information, source lists, some don't, and we even have cases of sources that were recorded on listings as sources of match that were determined to be illegal. Well, if you accept match from an illegal source, that is an illegal transaction, and in fact you have no match, and will be required to pay that back, and perhaps there will be other consequences as well. Just a brief word about audit resolution. At the very end of every audit, the corporation and the grantee agree or disagree on proposed corrective actions. For those of you who have not had the pleasure of seeing the auditors in your office as yet, this is what happens basically after the auditors leave. The corporation and the grantee management take action to improve the operations or correct deficiencies cited in the final audit report, and any debts that result from question costs, if applicable, are collected. And we provide usually a lot more explanation on these items, but very briefly at least, this is just touching on the highlights of what resolution is all about. So here once again, as I mentioned, here is our hotline number, and I would encourage you think about whether you are aware of any situations that may come to your attention that could be suspected fraud, waste, or abuse. Call this hotline number, send an email to the hotline email address, and hopefully there will not be too many cases of that in your shops, but we want you to know that that hotline is available to you 24 hours a day. During the daylight hours, it's manned by a real live person, and after business hours, it's manned by a real live machine. Okay, so that is the slide presentation here for us. We're going to dial in and take some questions here. Okay, and I'm going to do my best to respond to every one of these if we can. Can timesheets be scanned and kept, or are originals required? Well, it depends on the purpose of that. I already mentioned that the auditors would like to see originals in all cases. I'm not sure what the nature of the scanning is that the questioner is asking here, but if they're being scanned in an effort to archive those in a permanent archive or something, no problem with that, but in all cases, for the purposes of an audit, the original document should be retained for auditor inspection. Next, with respect to timesheets being carried by volunteers, let's see here. To the office, if we have authorized signature pages on file in our office to compare signatures to, is that acceptable? That would be kind of a case-by-case basis. I don't know the nature of what Laurie has intended here by this question, but we've already said that timesheets need to go through authorizing people, supervisors for authorizing signatures before they make their way to a payroll office. So I think I would rest on that more than trying to arrive at any or approve any variation of that. Next, if the timesheet that the volunteer hand carries to the program office has been signed by both the volunteer and the supervisor, would that still look suspicious to your office? I knew somebody was going to ask that. April, I'll catch up with you on that one. You know, we're made aware of the fact that there's sometimes a lot of miles between a volunteer site and a supervisor's location. So there are, you know, logistically, sometimes there are situations that would call for this to happen, hopefully not too many. I would say this would be a case-by-case basis. It's kind of difficult for me to give you a pat answer to it at this point. Next, what about volunteers carrying their timesheets to our program office because we're listed as a station supervisor and we need to sign them? Okay, well, nothing wrong there because, in fact, the volunteer is bringing that document for the supervisor to sign. I mean, if that's the intent here, I don't see any problem with that. What the prohibition is intended to prevent is someone bypassing supervisory control or supervisory review and submitting a timesheet directly to a payroll agent or a payroll office. So that's really what's intended here. So in this case, where they're just taking it to the supervisor, well, I don't see any difficulty with that. Given, you know, all I know is what the questioner is asking here. So without a little bit more detail, it's hard to give a better answer. We were told years ago that volunteers could fax their timesheets to us, and they were the same as original copy. Are you now saying we can't accept fax copies? That's basically what I'm saying. But again, there are circumstances that need to be explained to the auditors about why that situation may be occurring. So without having more facts or knowing why you were told that, who told you that, and what the particular circumstances were, it's kind of hard to respond to Gary's question with more specifics. Next, Am I saying that the PDs shouldn't make the changes on the timesheets? There are times when volunteers put in wrong information or sign in when they're out. Yes, surely the questioner here is probably somebody that I've spoken to at a training session. I recognize that question, and this was posed to me previously. My answer at that time was, if you can minimize this situation, please minimize it. Yes, there are times when all kinds of things happen, but you know what? I would much prefer that timesheet be disposed of and be recreated rather than having someone make a change, make a correction, if it's possible. And I understand there are electronic systems that don't easily allow corrections to be made. It depends on the individual situation. So while, unfortunately, I can't give you a pat answer to this that's going to be applicable in all cases, if you can minimize that situation or control it in some other manner, remember, internal controls are important in all cases here. Please try to minimize that. A couple more questions before time runs out regarding turning in volunteer timesheets. Could the timesheets for volunteers at sites that are in another county from the senior core office be faxed in on the date the timesheets are due, with originals mailed to the office that same day? Well, the key word to me in that sentence is mailed to the office. I'm not sure what that means. If you're using postal mail, they certainly won't arrive concurrently with the faxed version, so there's going to be, of necessity, some delay there for matching timesheets. Whatever seems to work for your situation and that is acceptable, if you are, Kathy Richard, if you are one of the grantees who has a single audit done every year, pose this question to your single audit auditors as well and see what type of an answer they respond with. In all cases, as I've said 3 times already, if you can minimize some of these situations that could raise a red flag for the auditors, please try to minimize those situations when you can. Okay, next, I may not be able to answer this one. How can they create indirect cost flat rates when everything that compiles these varies so much from region to region? I understand that there will not be any one flat rate. There will be multiple flat rates. So I think I failed to say that, but again, this is a proposal. This is the type of thing that has elicited so many comments from people, and I'm sure that very question has been posed already. All right, I think I have time for maybe these last 2. When your agency is having its yearly audit, is it safe for the same individual to provide that audit to the agency year after year? I presume that means is it all right for the same auditors to come in year after year to perform that? And that's really an individual management decision. In some cases, agencies have or grantees have multi-year contracts with a particular CPA firm. You're bound by that for a number of years. When that period of time expires, the contractual period, it probably would be advisable to renegotiate that, put it out for bid to another or to a collection of CPA firms. But folks, familiarity breeds contempt. And need I remind you of 2 words that really sum up the answer to that question, and those 2 words are Arthur Andersen. If you, some of you recall what happened with that CPA firm, they got a little bit too cozy with Enron, and that led to many difficulties for that organization. So if and when it's appropriate to change CPAs, I would do that. What would you consider an illegal source for match? Well, I think I'll leave that to your imagination because time is almost up here for us. But someone, for example, who's been convicted of a crime and whose name has been in the newspaper or in the police crime blotter somewhere, and suddenly gets magnanimous and generous and provides a match for your organization, that, of course, would be considered an illegal source. So, ladies and gentlemen, that puts a cap, I believe, on this session. I hope this has been useful to all of you. Again, don't forget our hotline number. Thank you for your excellent questions, and we'll see you on the road. Thank you, and bye-bye.